Okay, guys, so we're looking at gold. I'm looking at gold right now, and I just want to point out what I'm seeing currently on gold. So let's go to the weekly time frame first of all, and on the weekly time frame, or even on the monthly, right? If we look at the monthly time frame, obviously we can see that on the monthly time frame we have this rejection blocks, right? You know, this candle, we have this huge level of resistance currently. Right, you can see the wicks. You can see the wicks of these candles. Same thing here. Right. Now if I'm to use the wicks of these candles, right, that's right here. You can see how price died off of this level. You can see price came in here, created a high, right? Price reacted here, created a high, still couldn't break above it, and now we're seeing price moving to the downside, right? So that's on the monthly. Dropping down to the weekly, dropping down to the weekly, Dropping down to the weekly, we can see that price is within a fair value gap on the weekly time frame, right? We have this fair value gap on the weekly, and we're trying to see if this is going to act as support, right, to take price higher, or if this fair value gap fails, right? So we have two options. Option one is price plays out to the upside. Second option is price fails to move higher, breaks out of the fair value gap, and then we can use that as an inversion to aim for liquidities. We have this low, we have this low, we have this unfilled imbalance here, and we have this equal lows as well. All right. So these are the two scenarios we could get. All right. Now dropping down to the daily time frame real quick on gold, we have a level of interest that price moves into. All right. We have this level right here. As you can see, we have this imbalance in this candle, right? This bullish candle, right? We also have some more unfilled imbalance down here. So this is why I said on the weekly time, if that remember we are on the weekly time frame, there's an imbalance, right? There's an imbalance, and we can see these three candles right here. You can see one, two, three, right? On the weekly time frame, these three candles make up that a huge amount of that imbalance that we have on the weekly time frame, right? So we could see price dip lower. We can actually see price come lower, but we do have a level here, right? So let me drop down to the 4 hour time frame real quick and show you what that is, what I'm looking at on that level right there. So right here, this is what I've marked out, right? We have another block, a 4 hour other block before this huge expansion to the upside, right? So this last down candle coming in at about 1902, but you can see we have this round figure right here, 1900, right? We have 1900 right here, right? Psychological level, 1900, but 1902 is where we have this line drawn out, 1902, 1902, right? Boom. On the 4 hour time frame, this candle moves to the downside. You can see what we have here. We have a fair value gap here. We have a fair value gap here, right? So price dips into the fair value gap and then has this expansion to the upside, right? So now price makes a return to 1902. Price makes a return to 1902, right? As you can see right here, price makes a return to 1902, has this chases into it, makes this move higher, makes a return to this other block, and moves higher, right? We have this little consolidation, we have a turtle soup here, price moves higher, right? So we had an expansion to the upside on the 4 hourly. We've seen price moving to the upside, right? And we have this equal highs up here. And what we're trying to see is price going to reach, is this going to be a turning point? Is this going to mean price is going to be bullish, or is this level going to fail, right? 1902. As you can see, when price came into 1902, we had this spike below 1900, right? As you can see, price moved below 1900, psychological level, move back up, right? So this was a false break to the downside, which classifies as a turtle soup. So if I go down to the hourly time frame, so let me look at the hourly time frame right now. So this is what I was looking at on the hourly time frame, right? I considered this move a turtle soup, right? 1 p.m. and then New York session 2 p.m. We said the city recovery. We have a fair value gap on the 15-minute time frame right here. Price came into that, reacted to the upside, pushing price to the upside. So currently price returned back to that fair value gap, and now we have this move up into this breaker, right? You can see this breaker block right here. We have this fair value gap here. Price moved down into this fair value gap. We were in this consolidation, this range. Price made a false break to the upside, moved down into this fair value gap. We had this move to the upside off of this fair value gap acting as support, right? And then we had a huge turnaround, right? Price just died all the way to the downside, came back into this fair value gap, right? And now we have this breaker block. At the same time, we have this fair value gap right here acting as inverse. So this was support, and we're not trying to see if this fair value gap will start to act as resistance. So now there's two things that can happen from here. We either get price moving down, right? We have this equal lows. Obviously, this is previous day's low, right? Thursday's low. So we could sweep Thursday's low, and we could head lower. Or another thing that can happen is we could see a reaction from here to the downside, and then have price moving back up, right? To go for what will be our target if price is bullish. We have this equal highs here, right? So these are the two things that can happen, right? So I'm just going to be observing price. This is tape reading, right? This is all part of tape reading. This is all part of like, just reading price, looking at what's happening in the market from the higher time frames down to the lower time frames, and yeah, just understanding price action using ICT concepts, right? This is all I'm basically trying to do on this channel. I'm not really giving out any trades or trying to call the direction of the market. I'm only saying this could happen, that could happen, this could happen, because I'm not so good at trading ICT concepts yet. I'm not there yet. But yeah, if we look at the monthly, let's go back to the monthly because we have a consolidation on the monthly. We have okay. So what we can see on the monthly time frame is we can see that price is fairly bullish, right? We can see this uptrend all the way from this is 2016. In fact, gold has been bullish all through, right? Bullish all through, right? It's a very bullish pair. We had this retracement, and now we're bullish. We're moving up, and then we start to move sideways. So only one of two things can happen here, right? Now, if you look at what we had on this consolidation, we see we had price break to the downside and then return to the upside. So I'm trying to see if price could continue to the upside. If this was a false breakout to the downside, let me zoom in. Let me zoom in some more so it's more clear. All right, let it be clearer. So, like I said, look at this consolidation here. Price breaks to the downside, right? Let me do it like this. Price is moving sideways. Price breaks to the downside, right? False breakout, and then snaps back up immediately to the upside, right? So we could see continuations to the upside. So we know that on the higher time frames, price is bullish, right? If price is bullish on the monthly, we now look to see if price is bullish on the weekly. If price bullish on the weekly, we have price within this PDRA, which could act as support to the upside, and so on and so forth. So then back to the hourly time frame. Yeah, we just observe price action for now, and that's it.